there's one thing we can learn from recent stock market history, that is to never underestimate Amazon. This company is a beast. Being founded in 1994, it crossed over 1 billion in revenue by 1999, and now the company boasts a market cap of over $2 trillion, bringing in annual revenues of over 500 billion. A couple of weeks ago, I released a very comprehensive analysis on HIMS and HERS stock, a young, innovative company making waves in disrupting the US's legacy healthcare system. However, Amazon are now also entering this space, and one of the top comments I got on my video was, are Amazon a threat to HIMS? So that is what we're going to discuss today. Now, the most obvious thing on everybody's minds is what stops Amazon from taking away HIMS's share. They effectively have almost infinite money. They boast 94 billion of gross profit versus HIMS 714, and they've got 32 billion of annual free cash flows coming in with 73 billion of cash. HIMS is barely free cash flow positive and has just 100 millions of cash. Now, first things first, you can look at this two ways. You can say, okay, Amazon is going after this market, therefore HIMS is under massive pressure, HIMS is going to be destroyed, HIMS is going to be squashed, like many companies that have been squashed by Amazon. But you have to think many of the companies that have been squashed by Amazon have been the old legacy companies, very, very slow to adapt to change, right? Companies like JCPenney, for example. HIMS is an incredibly new, innovative company that have been moving very, very, very fast. So this is something to think about. Let's look at the timeline of Amazon's expansion into pharmacy, right? They acquired PillPack for 753 million in June of 2018. So that shows that they were interested in this industry. HIMS was founded in November of 2017, and in just over 6 years has already crossed 1 billion in annualized revenues. This is comparative to some of the best companies of all time, and it's a very, very rare feat for a company from founding to 1 billion in revenues in this short space of time. Meanwhile, Amazon, they have been making steps in this industry. However, the steps have been relatively slow and relatively consistent, and they've done it through a lot of acquisitions. They're trying to piece everything together. My point being is that, of course, Amazon can do what Amazon can do with all the money and the resources that it's got. But actually, if you look at what they've been doing within this space, they've actually been relatively slow. Now, the problem we have as well is Amazon Pharmacy is such a tiny proportion of Amazon's overall business. So we don't exactly know the overall size of it. What is interesting is on Trustpilot, which is probably the best place you can go for reviews for this type of e-commerce business, is that Amazon Pharmacy has only got 132 reviews to HIMS 5,000. So it's actually suggesting that HIMS has a lot more customers, and also those Amazon reviews are not nearly as good as HIMS. Fair enough, when you're just getting off the ground and you've got few reviews, then they're likely to be more bad reviews. But it's showing that, my point is that the number of reviews is actually quite important. HIMS has got a lot of reviews, and I know you can see here 3.1, and HIMS is a, consumer first company disrupting the legacy industry, making life easier for people. I will say for these types of companies, e-commerce and sort of general sales of anything, they don't typically do very well on Trustpilot reviews. Amazon overall has got less than a 2 on Trustpilot. Nike has got less than a 2. I'll put up a couple of other examples on the screen now. It's quite common for companies in the same sort of industry as HIMS, not healthcare, but just selling products online, this sort of stuff, to have a fair amount of negative reviews. And actually, comparatively, HIMS has done relatively well on Trustpilot for that. But my wider point is Amazon have got their fingers in so many pies. They've done incredibly well with a lot of things, but could Amazon be too far stretched? So for example, Amazon have got AWS, they're investing heavily into AI, they've got their large language model that they're working on robotics in their warehouses, they're working on autonomous driving, they're working on all their smart home stuff, they're working on space stuff with Project Kuiper. They have a lot of things going on. They've got their physical food stores, that's something that we have in the UK, where you can go in and walk out. So sure, Amazon have this massive 93 billion of gross profit to play with, but they're not allocating all of that gross profit to sort of reinvest into this healthcare pharmacy industry. And the other thing as well is like, okay, on the one hand, you can look at, oh, Amazon's coming in. You can look at that as a negative, but you can also see that as a positive. You can say, okay, Amazon have realized an opportunity here. This is a big total addressable market. This is huge, because if it's not huge, Amazon are not going to bother, because Amazon are a $2 trillion company. They are making some of the largest amounts of revenue of any American company, and they have got bigger fish to fry. So if this wasn't a big industry disrupting the legacy healthcare in America, Amazon wouldn't go after it at all. So you can look at it as a negative and you can say, okay, yeah, Amazon are coming in with their infinite money, but they do have their fingers in a lot of pies. Or you can look at it as, okay, Amazon are coming in. This actually shows you that this industry has got a lot of legs and HIMS are in the right place. Now, what we really need to look at here is we need to look at the data. What we have not seen yet is a noticeable slowdown in HIMS revenue or a noticeable decline in HIMS gross margins. And these are the actual figures that we are going to have to watch. Now, I covered this point quite belatedly in my deep dive video on HIMS, so I'm going to cover it now again. So in Q2 of 2024, HIMS reported 51.8% of revenue, right? So as you can see from this chart, the revenue ticked up for the first time in a while, which is amazing news, right? You can see for the previous two quarters, it's 47.5 and 45.8. However, this ticked up because of GLP-1. Now, they've only been doing GLP-1 for about 5 to 6 weeks in this quarter because they only announced it towards the end of May. However, when they were talking about their performance, they're saying their revenue growth, excluding contributions from the GLP-1 launch, is 46% year over year. Now, this tells us a couple of things. This tells us, A, for the last 3 quarters, HIMS revenue growth has not been slowing down because it's 47.5, 45.8, and now it's at 46. So actually, for them to at least have sort of bottomed out or stagnated at 46, that is a ridiculously fast revenue growth rate to sort of stop at. You know, the rate has stopped slowing down, particularly when you've got a forward PE in the 30s and your margins are not optimized. The other thing it tells us is that, okay, so they grew an extra 6 percentage points from GLP-1, which is absolutely crazy. And that's just for the 5 or 6 weeks that they were actually doing GLP-1. So think about in the third quarter, how much they're going to make from GLP-1. And we'll find that out in early November. Now, I know that HIMS is not all about GLP-1. That's what I was saying when HIMS got all the way back down to $13 a share. And all of the GLP-1 investors, or at least most of them, seem to sell out because the shares are at the same price before they'd even launched GLP-1, right? However, what it's actually showing is it's going to expose a load of customers to HIMS that had not been on HIMS before, which is really going to help HIMS in its other offering. So number one, they've got this good growth, which is excellent. Number two, you look at their gross margins, still very high, still very healthy. Yes, they came down a little bit in the last quarter. HIMS's long-term gross margins is actually in the mid-70s, but they've been ticking up for a long time. Yeah, until we see any sort of significant gross margin deterioration that is signifying some sort of pricing pressure, we don't really see the data that Amazon is disrupting them. When we talk about Amazon's like actual platform, what it seems to be doing is it seems to be making it very easy and very boring to order drugs online. So it wasn't until 2023 that they actually started doing telehealth through the acquisition of One Medical. Now, that was quite a big acquisition for this. That was for over 3 billion. So that is a significant acquisition. They started doing telehealth, and now you can go onto Amazon, you can order drugs online through Amazon Pharmacy and get them shipped straight to your door. So they are competing with HIMS on that side of the business. But what they're not doing is they don't have any compounding pharmacies. HIMS has 2 compounding pharmacies, and they've actually just bought a third one, a 503B, that is really going to help them with this GLP-1 situation at the moment, because it allows them to basically mass produce GLP-1 and get it done quickly without having the individual prescriptions coming in first and then manufacturing the drug. So they are doing really well with having a full vertical, and Amazon have got a lot of catching up to do with integrating the telehealth into Amazon and then, getting the consultations done and then building their brand within pharmacy. A lot of the time people are ordering on Amazon. It's known for its sort of cheap products. It's products that, you get shipped to your door easily, but not that much of a time. People are ordering products that are absolutely essential, for example, like they're not as established in this area. So we'll see how it takes off with people ordering drugs off Amazon. It may be that Amazon can utilize its existing brand of convenience. I'm sure that's the case. Obviously, a disadvantage that HIMS has got is for the moment it's having to spend a boatload of money on sales and marketing, or at least they're choosing to do that so they can land new customers and then expand them later once they're on the ecosystem, because this is the big differentiator. Amazon, because they don't have those compounding pharmacies, they're not offering personalized treatment. They're offering generic treatment. HIMS is offering generics, but it's personalizing those generics. They're offering custom formulas. So, you go onto HIMS, and also Amazon, it feels very, very neutral when you log on there. When I go onto HIMS, there's a lot of, how would I say? It feels like it's a very personalized experience. You get a lot of positivity from that brand. You feel like it's okay to be taking these kinds of medications. You feel very much taken care of on HIMS. Whilst Amazon, the branding is very neutral, very simplistic, very similar to Amazon as it was before. And I'm sure it works, but HIMS has a different style, which I think will really help differentiate itself. And it's already rolled out these 3 compounding pharmacies that are really helping it deliver personalized solutions to people. And that's where that ongoing doctor-patient relationship remains critically important for HIMS. So to conclude, it could be a negative that Amazon are in the telehealth industry. It's very early days for HIMS. The issue is we never get a huge amount of information of what Amazon are up to on their telehealth, because we've got so many things going on with Amazon all the time that you only get so much data out of it. So it's very, very early days. And what you just need to look for is you need to look for signals that HIMS revenue growth is slowing. They're under margin pressure. I was reading that Row, whilst it's private, their revenue is estimated to be between 200 and 300 million a year. Whilst HIMS, they're about to do 1,400 million for the year. So that's good. So against their next sort of small, sort of pure play direct to consumer on telehealth Row, HIMS are much bigger than Row, and they're growing incredibly quickly as well. Like, it's hard to catch up with HIMS. But yeah, Amazon are in this space. I am reassured because, looking at the timeline, it doesn't seem like they're moving particularly quickly. I mean, June 2018 to acquire PillPack. And then, by February 2023, they've got their virtual healthcare service. But for Amazon, it's not the absolute fastest. And HIMS have been able to do it faster because HIMS were only founded in November 2017. And they had everything up and running much, much earlier than what Amazon have got. And then it begs the question, are Amazon just going to take the whole monopoly in this market? Or is there room for HIMS too? And then you say, okay, Amazon are going after this market. That's because it's a big market. And if HIMS only captures not even the largest slice of it, then they're still going to capture a lot of it. So that's the way that I look at it. It's very, very, very early days. It's definitely a legitimate risk of investing in the company. You're taking on more risk investing in HIMS than you are with Amazon. But, you're not getting the same potential upside that you are with Amazon. What you're getting with Amazon these days is a very steady growth. It's almost like a big diversified tech fund in itself with all the things that you're working on. And you'll probably get, anywhere from an 8 to 15 annualized % return. With HIMS, you may get a huge annualized return if it works out, but also if it doesn't work out, there's that downside there. Whereas with Amazon, what's the probability that Amazon shares are going to halve and stay there over a long period of time? Probably not very high. Amazon is now a very steady growth company with not a very wide normal distribution of returns, not compared to HIMS. So it's a different risk reward profile. HIMS is one of those companies where it's a shot. If you think that they've got something good going on and you have a strong conviction, then it's a company that could offer a lot of upside. My point being is that Amazon could enter this space. They've not been particularly fast to do it compared to some other areas that they're investing in. They've got a lot of fingers and a lot of pies. So it's not like they're using all of their cash and all of their money to go after HIMS. They've not got that many reviews. They've not got that many good reviews. And they only acquired their most recent acquisition of One Medical to provide the sort of telehealth services and to provide the care services very, very recently. So it's early days for Amazon. Let's see what they can do, and I will keep you guys updated in the future.